Where does it come from? Do you just print it?
As a central bank, we have the ability to create money.
Hey everyone, hope you're doing well. Today is September 24th, 2021, and if you were paying attention to the stock market this week, we finally had a little bit of action. We had the VIX spike a little bit. We had people worrying about the whole Evergrande situation that we talked about last week. And so as the week kind of comes to an end, there are some really interesting developments in the world of finance and Bitcoin that I want to share with you today. And so we're going to talk about what happened with Evergrande this week, kind of the update there, what the government has kind of stepped in to do there. We're going to talk about FedEx specifically because their kind of issues with their supply chain, their labor shortage, are sort of endemic of what is going on with a lot of the broader economy in the US and Canada, this kind of labor shortage and what possible solutions there are to it and what the future is going to look like moving forward for companies like that. We're going to talk about two great and terrible stories in the Bitcoin world. We're going to talk about China banning Bitcoin for the 12th millionth time. And we're going to talk about Twitter accepting Bitcoin tipping through the Lightning Network and how that's a really big deal for Bitcoin payments and content creators moving forward. Again, if you have any requests for stories you want me to cover next week or the week after, we have a Discord that you can join down below. So if you have any ideas for things you'd like me to cover, I'm always open to covering whatever, as long as it's important to finance and markets, and we'll always find a way to kind of bring more educational material to you guys. So once again, thanks for watching. Let's jump into it. So this week we had the Dow go down a little bit. And of course, we've been saying for a while that the stock market's been really, really overheated. We've had, I think 9 straight months of going up. We needed some kind of consolidation, and usually when the market crashes or dumps a little bit, someone ties a reason to it. And so as we talked about last week, the Evergrande situation, which is essentially one of China's largest real estate developers going a little bit under or defaulting on some of their debt, possibly creating a bit of contagion for assets around the world. So what I said last week was basically a lot of people were comparing what was going on with Evergrande in China to the Lehman Brothers collapse back in 2008. But as this is a Chinese company and as finance and things are done a little bit differently there and the whole situation in total is a little bit different, my expectation was I didn't think that this was going to cause a massive collapse. I thought that at the end of the day, and the story is obviously still developing, that this would kind of be held under control for the most part. And it looks like a little bit this week that has come true. So while Monday, the stock market did kind of crash and collapse a little bit, we did get more info on how the Chinese government is going to move forward in terms of bailing out Evergrande. So just for a recap of the week, on Thursday, the Dow rose 507 points, 1.48%. We got a bit of a bounce back in the markets, which was nice. But what's driving the market for today? Friday's lackluster action comes after 2 strong days of gains for Wall Street stocks following the Federal Reserve's policy meeting on Wednesday. And as we've talked about before in other shows, they are going to be tapering their asset purchases, which some people have credited towards the last 9 months of the stock market just slowly rising up. They're going to start tapering starting potentially in November as investors react to indications by the central bank that tapering of its bond purchases might be near. So we've also talked a little bit, obviously, investors continue to watch for the latest on China's Evergrande, a property developer that helped to spark a rout on Monday amid fears over global contagion from the highly levered company. However, the market appears to be betting that China will help limit the damage from the developer. As of Thursday, bondholders still have not received any money from Evergrande, which was due to make a $83.5 million interest payment on its dollar bonds. The company has a 30-day grace period to make a payment, but barring that, Evergrande could trigger a default. Those shares fell 12% in Hong Kong on Friday. Elsewhere, media reports said Friday that the company's electric vehicle unit hadn't paid suppliers in months, with employees also receiving no salaries for September. So, as I mentioned before, Evergrande is known for the real estate, but they obviously have a lot of other components to their business as well. And let's just dive a little bit into what exactly is going on. So, as we talked about, as these bonds kind of come to maturation, interest payments are due every month or so. So $83 million was due, and it wasn't paid today. That wasn't completely unexpected, but what was a little bit odd is how quiet the company has been around all this. China has done a couple things. Their central bank has done a couple things to kind of say, what they're going to do if this can't be contained. But they're sort of letting this play out. They're not jumping in right away and interfering, and everyone is kind of keeping a little bit tight-lipped on this until it becomes an issue that really needs to be contained. So, China's Evergrande has been issued marching orders from Chinese authorities on how it should prioritize its cash, while the government begins to prepare for the group's ultimate downfall, according to reports. The looming failure of the world's most indebted property developer has captured the attention of investors around the world this week amid concerns that it could cause a financial crisis in China that spills over into other markets. Meanwhile, authorities in China are asking local governments to prepare for the potential downfall of Evergrande. The government has reportedly signaled a reluctance to bail out the group while it braces for the economic and social fallout of its total failure. So what essentially the Chinese government wants to do is it knows that there's going to be a lot of people impacted by this. You have the investors, you have the equity owners of the company, you have the bond holders, and you have, of course, all the real estate that is not finished from Evergrande as well. We're talking thousands, even potentially millions of units across China that are not even really started or half completed. And so for the Chinese government, those are priority, the latter part, which is all these people that have put down money to buy units that are not really finished completion. As we mentioned before, Evergrande has also not been paying their contractors. And so this is something that China wants to help prioritize if they are to take possession and ownership of this company, similar to what the US did with Lehman Brothers and Fannie Mae and Freddie Mac in the US. So the priority is to help the investors of the units to bring these units to completion, these real estate projects. And then if the bond holders and the equity holders fail, so be it. They are a lot more reluctant to help bail those people out. The Chinese government has also pumped some liquidity into the system because there are concerns that with what is going on with Evergrande and some of these bonds not being paid back and some of these bondholders going belly up, that some of these banks might not have enough capital or their collateral might be in danger for lending practices. And so what this is basically called is a repo agreement or repurchase agreement. And essentially what that is usually you have a whole bunch of different counterparties and a bank will have fractional reserves. And what will happen is that banks have assets of all sorts of different kind, but when there comes a time where a bunch of cash is owed, in this case, maybe let's just say one of the bond payments from Evergrande, they might not have available cash. So what they'll do is they'll find a party which they can lend their assets to. If I'm a bank, let's just say I own a bunch of shares in something, I can say, look, I need a quick cash infusion. I'll lend you these shares. You give me the cash. We'll shore up the cash in a day or two, and then I'll pay it back to you, and you can give me my shares back. So that's what's known as a repo agreement. And basically, the Chinese central bank has done this. The US central bank does it all the time, where they essentially lend cash overnight just so that these banks have liquidity for doing everyday transactions. And this is especially important in instances where there's a lot of fear in the market as people go to withdraw cash out of banks or sell assets and they want to get their cash out. Banks sometimes just don't have enough cash, and that is, of course, the problem with the fractional reserve banking system. We know Bitcoin is a bearer instrument, and if a Bitcoin-based economy comes around, the odds of having such wide fractional reserve banking will probably diminish a little bit. So if that explanation didn't make sense, the way I like to explain it too is just imagine that you're lending a friend some money, knowing that they're going to get their paycheck in a day or two, and they just need to go out and they need to buy some stuff to fix their car that day. But they don't want to wait for their paycheck, so what your friend will do is he'll lend you a watch, you'll keep the watch, you'll lend him his money. He buys his thing, he gets his paycheck the next day, he pays you back the money, you give him back his watch. So a lot of the repo operations are public here, and you can kind of see the money that's happening to be injected into the system. We know that obviously, China was the first to kind of undergo the coronavirus pandemic, and they had a lot of repo operations back in January, February of 2020. And now they've kind of had the most repo operations since then because of likely the Evergrande situation. So in terms of what's next, I don't really know. I would say that I think what they're looking to do is basically just split up Evergrande and take this whole conglomerate and find all the different areas where the Chinese government can interject. One of the big problems is that they're not paying, obviously, the salaries of some of the workers there, and I don't think China will really stand for that. They've done a lot to eradicate poverty over the last few years, and so, in terms of priorities for them, it's going to be paying the suppliers and the workers and the people on the ground floor, the home purchasers, getting everything settled down for them. So let's just jump into something here. Let's talk about FedEx a little bit. So this is a story that I don't think is, like a global news story this week, but it's something that I've talked a lot about on the show, and a lot of people have probably recognized in their local communities, which is just this immense labor shortage. You have people that are, running restaurants and they cannot find dishwashers or waiters, and they're jacking up salaries like no tomorrow, and the people still aren't coming to work at these places. The questions we ask are, why is this happening? And then second of all, how can you remedy it? We haven't seen these labor shortages really obviously crash the stock market, but we're starting to see what is happening with some of these supply chain crunches and these labor shortages in major companies. And one of them here is FedEx. FedEx, obviously, big shipper. If you order anything off Amazon, need FedEx, right? So FedEx had a earnings report, and they dropped the most they have in about 18 months because of these labor shortages. And we'll just dive into the story here a little bit more. About $800 million of additional costs grappled the company in its latest quarter and will likely repeat in the current one, the company said. At the ground unit, which handles most of the holiday delivery surge, about 6% of daily volume is being rerouted away from sorting hubs that lack enough workers. Management quantified the expected headwinds, but did not convince the market that they were under control. Ossenbeck said in a note to its clients Wednesday, "At this point, we are less confident these issues will go away." So the shares dropped about 7.9%, around 12 o'clock today, as much as 9%, the biggest intraday decline since March of last year, which was the famous COVID dump. And then highlighting this here, illustrating its problems plaguing the package giant, a ground unit sorting hub in Portland, Oregon is only staffed at 65% because of the labor pinch. And the company responded by shifting 25% of volume that would typically go through Portland to other facilities, straining the network and pushing up costs to haul packages to other areas. FedEx is trying to attract workers by offering higher wages, which have increased more than 25% from a year earlier at some express unit hubs. The company also is turning away some package volume from customers to help keep service levels from deteriorating. So you have a mix of things going on here. You have FedEx turning away clients because they can't, handle all the volume, and then you have them raising wages to hopefully attract new workers into the situation. So while unemployment is not at zero, there is a crunch in a lot of different sectors here. And working at FedEx is not a job that requires extensive training. This is kind of like a base level job, paying, between $20 to $30 an hour. But again, they're raising their salaries about 25%. And so you have this in the shipping industry, and this causes massive problems for a whole assortment of other companies. You have the e-commerce sector, which relies on this. Their shipping costs go up, and a lot of e-commerce platforms offer free shipping on their products. Amazon, of course, bundles it in with Amazon Prime, which a lot of Americans have. They have their own shipping problems there as well. The question is, what is anybody going to do about it? So I've kind of wrote down here a few of my thoughts as to, the contagion, and this is the real contagion. The Evergrande story is one thing, but this is something that affects, I think, all of us. The contagion of a labor shortage in the shipping and manufacturing industries. So the question is, how do you convince new workers to join your workforce while not making it unfair for old and current workers? Because not only do these companies need more workers, they can't just offer, massive starting salaries while the old workers are kept on their same pay. You're going to hire people for, now $20 an hour at some McDonald's, I'm hearing. You can't keep everyone else on minimum wage at like 15, right? You got to raise their wages too, or you got to give them one-time incentives so that they actually stick with the company. Because now I think workers are starting to realize that they have a lot of leverage in these situations. So one of the things that companies have done is that they've offered new workers bonuses. So you'll have like a one-time employment bonus. Let's just say, you join, you sign up, you get hired, you get, $1,000 or $10,000. And this way they don't have to have the wages locked at such a high rate when this labor shortage sorts itself out, which it hopefully does. Old workers are also going to need incentives to stick with the company. So I've actually heard this firsthand from someone that I know, getting shares as a bonus gift for the company. And shares, I think, are really if you're a publicly traded company, are a really good incentive to keep people aligned with the company's growth, because you're watching these things. You're not going and usually selling them right away. It would suck if you were an Amazon employee, you got paid a bonus in shares and you sold them like 10 years ago, and only to watch them, materialize 10 times from where they were back then. So that's a really good way to incentivize people. But at the end of the day, you can do all that stuff and you still won't get employees. And a major part of that is that people today are, number one, some people have said, Canada recovery benefit or in the US unemployment, people are finding other sources of income nowadays. And I think that's a major reason for a lot of employment and labor crunches right now, is that people are finding ways to be entrepreneurial or they're finding other ways to diversify their income streams. You have obviously the rise of OnlyFans. People can, sell their own content online if they're attractive. But that's a weird example. But you have other things. You have people investing in cryptocurrencies, you have NFTs, you have people just using other income to start their own small businesses and sell things online, Facebook Marketplace. There's all sorts of new ways now because of the internet to arbitrage things. And so I think, and I don't know what the stats on this are, but I think since the COVID pandemic, people have found a lot more ways to diversify their income. And they're also noticing that all these assets are appreciating as well, whether it be Bitcoin or stocks and stuff. And so people are putting their savings into that stuff. And when those things appreciate, they feel less pressure to take on more work, more shifts, and, hopefully the standard of living rises a little bit along with that. At the end of the day, what's really needed for these companies is more automation. So a lot of these jobs, whether it's, shipping and traveling across the country with a bunch of boxes and stuff, or you're working in a fast food restaurant, a lot of these things can be automated. And so what I think is going to happen over the next few years is that the demand for automation and the production in those companies creating robotics, machinery, self-driving cars is going to go through the roof. Because at the end, this is really the only way to solve a big labor shortage like this. And so there's a lot of people like Andrew Yang who have talked about UBI as being another thing as well. As we kind of move into this automated world, maybe we don't need to work 40 to 70 hours a week doing manual labor. Maybe we can do higher level things. Maybe we can retrain ourselves. That's a topic on its own. People have tried this retraining. Companies have paid a lot of money to retrain their employees to do things. But again, at the end of the day, no one's forced to take up or learn a new skill or learn a code or anything like that. So it's really hard to see a lot of follow through on those programs. But what I would say is if you're noticing this problem like I am, and if you want to invest in it and think, okay, there's labor shortages, where's the world going and how do I invest in this? I would say pay very close attention to companies that are prioritizing physical automation. I'm not just talking about online virtual assistant, digital automation. I'm talking about physical automation. There's still obviously a need for a lot of employees in the digital world while digital automation gets built out. But physical automation is really where there's going to be a lot of changes, I think, in the next few years. The fact that most restaurants still have burger flippers or dishwashers is pretty crazy. And every year, the cost of creating robotics to do these things on their own declines and declines and declines. So it's really neat. One of the companies that I like to follow when it comes to this is Domino's. You can look up a couple of videos online, but Domino's actually have been one of the first companies to have self-driving pizza deliveries. And they have, robotics and machines that are making, test kitchens where they make pizzas completely autonomously. So there's a couple of companies that I've looked into on this. There's a lot of automation companies. They're not rapid growth companies. They've kind of been churning at this for a long time now. But CGNX, they're doing automation with machine vision and machine learning, manufacturing, the machinery, and then tracking goods and services as well. One of the big ones I think is Tesla. I think what is going on with their machine learning and their autopilot, they are at the forefront of self-driving. I don't think any other car company is close to the amount of data that they have and have not perfected their systems as much as Tesla has. So eventually what Tesla will be able to do as a company is sell that software and sell that protocol to other car manufacturers. They are making their own, shipping trucks and freighters and stuff like that, but there's obviously going to be a whole bunch. Companies are not going to want to just buy Tesla cars, and I don't think Tesla will lock down their software to just their cars. But in terms of a stream of income, the automated driving element of what they're doing is big. And then obviously they announced a couple weeks ago in one of their AI days that they're making their own Android that will be able to do basic tasks like this as well. I don't know if that's one of those things that Elon says is coming next year and never comes, but that's obviously part of the future as well, is having a more rigid or less rigid automated androids to do some of these specific tasks. Because at the end of the day, you can have automated cars and robot arms and all this stuff, but they aren't really able to move around. And so things like Boston Dynamics and things like what Tesla are doing are really going to be part of the future of automation. As weird as that is, because you're going to be seeing walking dogs or walking people delivering mail one day, and I don't think it's that far off. I would say within the next 10 years, I think we will have all seen a automated mailman, a robotic mailman. So, yeah. that's about it for that story. Let's jump into the Bitcoin stuff. So yeah, this labor shortage stuff, it's a net negative right now, but again, it really just pushes people to innovate in the automation stuff, and I think that's going to be incredibly cool in the future. The big question is like, what are all these displaced jobs going to look like, right? Like when all these people lose their automated or they lose jobs to automation, what do people start taking up? Do they start going more into philosophy? Do they go into the arts and stuff, more culture? Who knows? It's a futuristic idea for sure. All right, next story. China banning cryptocurrency for the 20th time. So, Bitcoin dropped a little bit today after dropping again from the Evergrande situation. But China has come out for the billionth time and said that Bitcoin is banned and cryptocurrency transactions are illegal. So the Central Bank of Canada has basically said virtual currency-related business activities are illegal financial activities and seriously endanger the safety of people's assets. So we know that China is not a completely free country. The government has things they want you to do and ways they want you to comply, and they don't want you investing in cryptocurrencies. They have a lot of stringent rules for also investing in securities and stuff, so this isn't weird. But of course, the Bitcoin market is a little bit stingy this month, especially with everything that has happened with Evergrande. And people are a little bit worried every time they see a headline like this. The question is, will any of it stick? Now, if you've been around the cryptocurrency space, you know that Bitcoin being banned is a very popular headline. Starting back in 2013, China banned all banks from handling Bitcoin trading. China will ban cryptocurrency exchanges. This was in 2017. I remember Bitcoin dropping from $4,000 to around 3,000 or 2,500, but that's far in the past. Beijing bans Bitcoin, and then obviously, one of the most recent ones is that in June they banned and they wanted to kick out all the cryptocurrency miners. So it's very clear that China does not want cryptocurrency or Bitcoin as an industry in their country. The fact that the market is responding the way it is not abnormal, but as you can see, every single time that China comes out and says Bitcoin is banned, it's just another thing that gets absorbed by the market and is less severe each time. So Bitcoin's down around maybe like 7 or 8% today. Back in 2017 when this happened, it dropped like 30 or 40 over the course of like 2 or 3 days. I don't think that's happening again, but who knows? One of the interesting things to think about with Bitcoin too is I mentioned this as well, is that Evergrande is a bit of a wake-up call to Chinese investors who on average have around 70% of their investable assets in real estate. I think a lot of Chinese investors are going to want to diversify after what they've seen happen there, whether it's buying bonds or condos that now are at risk of not being finished. I think what is going on with Evergrande is indicative of probably more of this happening in China in the future. And so I don't want to be a real estate investor, first and foremost when I keep seeing these stories. And so what are your other options, right? Mutual funds, stocks, securities, and cryptocurrency. And so your country is basically saying, okay, no cryptocurrencies, don't worry about the real estate, government will fix all that stuff. Eventually, some of that faith will be lost, and I think especially with younger generations, you can't stop people from hearing about Bitcoin. As soon as they leave the country or go anywhere else, it's a global phenomenon, right? And so purchasing Bitcoin, while it might be difficult in China, let's just say you can't use cryptocurrency exchanges there, you might have to use a VPN, or I don't even know if that works in China. When it comes to owning it, can't really take it away from people, because at the end of the day, if you want to own cryptocurrency, if you are not doing it on a centralized platform, which seems very risky to do if you're living in China, it's 12 or 16 phrase words, or it's like a 30 to 40 character numeric password that you can remember. So again, that's what really makes Bitcoin such an interesting asset, is that because it's globally distributed, all you need is kind of the login in your head, which is your seed phrases or your private key, and you can keep that money free from any authorities. They never have to know about it. You cover your trails, obviously, but I imagine there's going to be a lot of Chinese investors who are not allowed to own Bitcoin, but will figure out a way to move money out of the country and then get their private key sent to them. You can't really block these things in messengers. You can't block, phrase words from being encrypted and sent into the country, and people will just keep this stuff long term. So, yeah, no trading of Bitcoin, but you can't stop a nation from hodling it. You can't stop anyone from hodling Bitcoin. And that's what's important. All right, last story here. I'm feeling a little bit buzzy today, if you can tell. I had a coffee. This is one of the things that's a boon for the cryptocurrency network, and something I've actually been really trying to research and understand a little bit more, but that is Strike, this company that was set up by Jack Mellers, about integrating their technology into Twitter so that you can tip people now in Bitcoin. So this is kind of interesting because they are a payments company led by entrepreneur Jack Mellers. They're making a technology behind Twitter's new Bitcoin tipping feature open to the world. And I think I talked about it a little while ago, but if you don't know what the Lightning Network is, it's essentially another layer on top of the Bitcoin network so that people can send Bitcoin through kind of specific peer-to-peer contracts without having to deal with actually sending them and transmitting all that stuff to the blockchain right away. So if I'm a merchant, I can have an open channel on the Lightning Network. People can send me Bitcoin, and they can do it basically instantly and for free. And then if I want to actually record those transactions permanently on the Bitcoin blockchain, I just have to close that channel out, and then it gets saved on the Bitcoin network, and it's irreversible, permanent, and all that stuff. So people are really trying to figure out, how do we actually open the Lightning Network up? Because it's very much been a peer-to-peer system where one party has to open a channel and another party has to open a channel. But Jack Mellers through Strike has obviously figured out an API and a way to open up the Lightning Network so that anyone can kind of just easily transact with it, which is really cool. So another thing that's interesting about Strike, and he said this in an interview and I'll link it down below, is that the Bitcoin network to him and to this company is a lot more than just the asset Bitcoin itself. And there has to be that distinction. There's Bitcoin, the asset, and then there's Bitcoin, the network. And Bitcoin as a settlement network is really unique because, again, everything is permanent on there, everything is openly distributed, and it works 24/7, borderless around the world. You can compare the Bitcoin network to basically the Visa network or ACH transfers and things like that. And essentially what Strike is doing is they're able to actually use the Bitcoin network to help you send USD or euros or yen across the world. And they can use the Bitcoin network without actually having the users touch any Bitcoin. So they've essentially used it as a settlement layer. An example of this would be if you have the Strike app and you live in the US and you have someone with a Strike app, let's just say in Malaysia, you have $20 on it, you can send it to a Strike user over in Malaysia. And what happens on the back end essentially is that that $20 gets converted into Bitcoin, and then that Bitcoin gets sent over to Malaysia, settles there, and then is converted back into US dollars. At the end, the users just see the dollars, but you can essentially have like unlimited and free transactions this way because Strike is doing everything on the back end through the Lightning Network and doing all these conversions on the fly. There's a couple of videos I'll share at the bottom of this below that kind of show this. And essentially, because of this technology through the Lightning Network, you can almost stream money to someone. And so there was an example of Jack Mellers basically saying, look, this is how powerful the Lightning Network is. I can click this button and send 10 cents to someone every 5 seconds continuously, right? There's no monetary network on Earth where you can send such a small amount of money continuously without obviously like choking the bandwidth or having a ton of fees accrued. You can't send 10 cents, of microtransaction through Western Union or the Visa network and things like that without the middleman being like, that's too much, right? Like you gotta up the amount that you're putting in and do less transactions. So Lightning effectively has almost unlimited transaction capacity, and that's really cool. And so the big question people have had with Lightning is like, when is this stuff going to go mainstream? And we're finally seeing now with its integration into Twitter, the technology kind of being put to test, which is really, really cool for the network. But yeah, that is everything for today. Woo. Thanks so much for tuning in. I'm going to dive into your comments. But yeah, we had a little bit of Evergrande woes, kind of that's up in the air. We looked at what was going on with FedEx and the boon with the labor shortage and some ways to fix that, China banning Bitcoin, and of course, Lightning coming to Twitter. That is everything. All right, how's everyone doing today? Got 10 people watching. Let me ask you a question. How did you feel about the market this week? Did you watch anything? Do you feel like we're going into a really good end of the year? What are your thoughts on basically, where the market is today and how you think the rest of the year is going to pan out? Mike Dundee. Yes, I did talk about Tesla. Again, I think Tesla is a company that was misunderstood. I misunderstood it a long time ago as well. But Tesla, I think, is going to have a lot of sway in their automation in the future. I think that AI robot thing, I don't know how big of a deal that's going to be, but in terms of their self-driving software, I think they're going to have a massive play in licensing that out to people. So, you think FedEx labor shortages will speed up automated cars? FedEx lobbying to increase the speed at which automation tech gets implemented. Well, I don't know about them lobbying it, but they're going to have to invest a lot more into this stuff, obviously, right? Like they're going to have contracts with Tesla and these other automation companies and robotics companies to build these things out. Companies can't just, just stay stagnant. And, and FedEx themselves, they're not like a big vertically integrated massive company. They outsource the creation of a lot of these things. So they have to go and they have to say, look, we're willing to pay top dollar for these things. You just got to make it. And they will go into contracts. Now, one of the things that I thought was kind of interesting, we've covered Nikola before, is that when you have this massive demand for automation, you'll always have scam companies pop up and try and like build these things out and say, look, there's a big demand for EVs. We're going to make a truck that can, run on hydrogen fuel cells and go across the country. And so you get these scammers like Nikola pop up because they're taking advantage of this massive need. And there's a massive need for electric cars right now for everyone as the government's kind of mandate the, gasoline cars going away. But in terms of automation too, you're going to see probably a lot of companies and maybe another repeat of the Nikola story with an automation company as well. And you just have to watch out for these things when you invest. There are thankfully massive automation companies that have been around for dozens and hundreds of years actually that are building these things, but there will inevitably be new ones as well. One of the ones that I wanted to actually share here was Miso Robotics. This is always something that like I've never understood. Being in 2021, how do we not have automated burger flipping and stuff like that, right? Like, so you have companies like Miso Robotics that are building basically an arm that can do half the work of a McDonald's kitchen, right? That can just hang in the ceiling, flip burgers, make patties, and do all this stuff really ergonomically. Beverage dispensers as well, automated coffee makers and things like that. Like, all this stuff is coming to a Starbucks or a McDonald's near you. And in fact, probably a lot of these companies have these things going and they're like test locations. And the question is just like, these machines might cost $1 million right now, or $2 million. How do we justify implementing one in every store when we just hire people for cheaper right now? So, they have to figure out that cost because it won't pay for itself, for quite a few years. But they also know that there's going to be a certain equilibrium where they wait, the cost to produce these things gets cheaper, and then eventually maybe the cost to build one of these robots is like $300,000 or $400,000. Then you can justify putting one in every McDonald's, right? So, all right. Too many compelling bear and bull situations stuck in the middle. Yeah, it kind of depends where you are, of course. I know this week Tesla was unusually strong despite all the Evergrande stuff. So that just tells you that people are kind of forward looking with that company and they're not really worried about, the near term stuff. Don't know if you're going to go on all-time high on Bitcoin now. Well, here was my bet. And I actually, you know what? I'll put this on the YouTube channel as well. I said that Bitcoin will either be above its previous all-time high of like 65K this year, or it will be under 29,000 by some point by the end of this year. There's no way that we're going to stick between 29,000 and 65,000 till December. That's my honest opinion. And if I'm wrong, I will eat an onion apple style. I would eat an onion like an apple on camera, and you guys can watch me do that. But I'm positive that something is coming for Bitcoin. Either we're just done and the run is done and people have lost faith and they're just going to dump it for whatever reason, or there is going to be all this pent-up energy looking for a new all-time high this year and a lot of money that will come into the space for one reason or another. I don't know if we'll get an ETF, but I think something happens by the end of the year big. So there will be some big catalyst, either bearish or bullish for Bitcoin by the end of the year, and it's not going to just go sideways. Take my word on that. But if I'm wrong, I'll be eating an onion. Market was scared for Powell talking. I do think that the taper announcement will be bullish. We know it's going to happen. Get it over with and behind us. I think at this point, tapering has been priced in. Like, we've talked about it a lot. All the other Fed chairmen have kind of talked about it quite a bit. I think the market has kind of, accepted it. The question is like, what are going to be the industries that move forward from this? And this is something that a lot of people who have been bearish for the last few months have talked about, is that the major companies like the Facebook, not Facebook, Amazon and Apple have not really advanced in about a year. They're up maybe marginally, like 1 to 5%. And they have different situations going on. They have supply chain issues going on with Apple and semiconductors and stuff. And then you also have Amazon, which is part of the whole shipping thing, right? But these are kind of the biggest companies in the S&P 500. And if they're not able to kind of have bigger breadth and, start making new all-time highs, then they're also, not going to be able to drag the market up with them. The market has gone up for sure this year without Amazon and Apple. But I think in order to see the next leg up, they have to start moving too. The way that the market is able to continuously make new all-time highs is that the industries within them kind of shuffle leadership roles. You'll have like healthcare have a powerful week, or financials have a powerful week, or industrials, or technology. And so technology just stays stagnant, and it is the biggest driving force in the S&P 500. I don't think we move much higher, but again, I've been proven wrong a little bit this year. More on Tesla fundamentals. Okay, do you want to do some TA here? I always am a little bit embarrassed to do technical analysis because I don't know hotkeys for all the trading view things, but I'll just give you my takes on a couple stocks. Yeah, Tesla had a big day today. If I was to take a guess, I would say, especially after today, Tesla looks like it's probably going to be challenging those all-time highs soon. So on the weekly, it looks really good. We almost broke the weekly resistance level here of like 780. Powerful week today, ending at the highs. Kind of have like a nice base of support here, 539, 546 double bottom here. I have a little bit of Tesla long term, but it's like 10 shares. On the monthly, yeah, like we basically had, a bit of a monthly consolidation here, lower high, higher low / double bottom. It was close enough. And then now we've just been kind of ripping up here for the past few months. I would like to see increasing monthly volume. You can see kind of, since we were listed on the S&P 500, the volume has gone down. However, the price has also tripled or quadrupled. So that's also just indicative of like how expensive the company is now. What else? Yes, I will be eating the onion. But yeah, daily on the Tesla, I think, is looking great. Like that was a really powerful day. I don't like to bet on these things all the time, but generally when I see a daily engulfing candle, it's almost guaranteed to get a gap up. What that basically means is that we lost the lows of yesterday and it looked like we might consolidate, but the bulls came in, they kicked ass, and they also went past the high of the day, and then also they closed at the high of the day. So you have like 3 bullish strikes in favor for that stock. And I would say the odds of a gap up on Monday are pretty good unless something macro is bad with the markets. If the markets open flat or a little bit up, I would expect a Tesla gap up. It has to contend with the last monthly resistance at 780. But, what's a 1% gap up for the stock? It's 780. So it just needs a little bit of market to just be normal. And then sure, this is going back to all-time highs. One of the interesting things about Tesla actually I've noticed is that the daily RSI hasn't really been able to get overbought. Basically since the top. The last time the RSI on the daily was overbought was on the all-time high at around the 26th of January. So if this thing starts to rip, you'll see it start breaking out. And I know a lot of people watch the kind of the RSI as like a resistance level, like it can't get over 70, and then once it gets over 70, it might rip. I don't like buying things when they're daily overbought, but that's just something to take note of is, once it clears 780, there's not much here to contend with, maybe about 880. Then you have 900, and then you have the psychological levels. So yeah, pretty powerful. All right, guys. I got to wrap it up for today, but thank you so much for tuning in. And yeah, hopefully next week will also be just as interesting. I have just as much coffee in my system. Feels more fun doing it like that. But yeah, thanks so much for watching. Take care. And again, if you ever have any stories you want to see, or you have any other questions that I didn't answer live, you can join the Discord in the link down below, and I'll also post some links to some of the stories I talked about today as well, so you guys can kind of follow up and see all that. I think the way that I talked about Strike with Jack Mahler's kind of going into showing the money streaming, it's really cool. And you don't think about how cool that is until you realize you can pay content creators real time for doing something, or you could pay an employee real time for doing something as well. Everyone's used to getting paid at the end of the week or every 2 weeks or every month, but imagine doing labor and getting paid hour by hour or day by day. I think there's probably a limit. I think you don't want to pay people for working, every hour, because then they're just going to look at their phone and be like, oh, I'm making $10 right now. But I think it'd be cool to pay people at the end of every workday. That's a really cool idea to have the option of doing. So yeah. All right, everyone, take care, and I'll see you next week.